Pleasure to be with all of you today. I always enjoy visiting with you all. I love the drive down to the valley, but this will do for now. So I was trying to frame this in a way of good tips to try to remember when we're dealing with budgeting, especially budgeting with federal grant funds. So let's go ahead and dive in. I wanted to cover some reference information first to kind of set the tone for depending on whether you're the finance person, business manager, or you're probably a grants person. So I wanted to make sure that we're kind of all on the same page and have a common understanding. So what are federal grant funds? I always tell my campuses pretty much if it starts with a 200, it's going to be a federal, which means it has all these strings attached and all these concerns that
Right.
we have to look at.
Mhm.
So of course, 211, the most familiar one to all of us is ESSA. Every Student Succeeds Act, Title I, Part A, 224, Idea B is another one. And then I cut and pasted from the FASRAG. Basically, it's from 201 to 289. So again, just making sure that we're familiar with what they are and have this extra attention on them, because guess what? The oversight agencies are putting a lot of oversight on them as well. Okay, and how do we account for the revenues? And this has been an interesting conversation. I guess most of the time we have indirect costs that we put to 5900s. We have our state revenue, like from ESSA, from Title I, that we're used to booking. And today's really more about the general federal grants, but just kind of to hit on this a little bit. And then I've sat through so many different sessions, either TASBO, the Service Center, or TEA directly. So I wanted to give you a recap, and I had to go to the FASRAG just to make sure that I pulled out all the ones that could happen. So 5919, I have to say I hadn't used that in forever. But I had to use it this past time with some of the CRF funds, again, with COVID, the pandemic, the different sources of funding. We received funding from the county, so the appropriate object code for that was 5919. What we're most used to is the TEA, which is 5929, distributed by TEA. 5931 and 32, some of you are familiar with that because it's SHARS and MAC. 5939, again, I don't use as often, but I also submitted a CRF grant or funding request from TDEM and received that money. So after a lot of hoops and jumps through all sorts of documentation requests, ended up getting a substantial amount. So that was a 5939. And then impact aid may not impact any of you because that's funding for primarily military schools, Indian lands, and also some federal government buildings. So 5941 is specifically for impact aid. And then 5949, I tend to use because as what I refer to as a military district, a district that sits completely on a military installation, we receive money directly from the Department of Education and the Department of Defense. So again, a quick recap, but all in all, 5,900 is what we're looking at as being the federal funding. So how do we account for expenses? Kind of big, broad statement is we go to the FASRAG. Everything that we use in the FASRAG for supplies, for services, for equipment, etc., we use the same thing for federal grants. So where we might use a different set of object codes, a different set of fund codes, when we get to the expenditures, we have to follow FASRAG. And I'll talk a little bit about TEA and the federal fiscal monitoring activities and how critical that is, because we don't want to get on the radar as far as not complying with some of the grant guidelines. And this is one of the ones that I see pop up from time to time, where districts are not using the FASRAG account codes, but simply said, we're going to use those same ones that we use for everything else. And this is a NOGA. Now, if you're a finance director, business manager, CFO, I would hope that this is not the first time you see this. The grant manager typically receives the notice of grant award or the NOGA. I am through TEAL and eGrants, I think I have myself as a grantee official, if I'm not mistaken. I'm trying to remember which one of those levels I have. The reason I have that, one, I used to also in a small district be the CFO and the grant manager. Now the CNI side of the house does the grants. But I retain access because every time a NOGA is issued, I get an email and I get the NOGA. Every time there's any erratas, any changes, I get those as well. Plus, I have full access to eGrant, so I can pull down the federal grant applications and the amendments as well. And to me, that's critical because I need to be in the loop to know every time that we get more money. For example, in the spring, we get final entitlements for some of these entitlement grants. And I need to know so I can work with the CNI side to say, okay, we got a new NOGA, we got another $20,000. Tell me where it's going to go so I can make sure it gets in the budget so we can get it spent in time. So again, it takes that kind of conversation. So again, key things on the NOGA. If you're an accountant and have never seen one, I think it's very important to understand a few things. The NOGA tells us what account code. That's great. 211 fund code. It tells us what revenue code, 5929. It gives us the CFDA number, which is going to end up on our schedule of federal awards, our CFA on our audit report. And then I think one of the most important things, not only for grant staff, finance staff, very, very importantly for purchasing staff and budgeting staff, we need to know when the grant funds start and when they end. So if you look at my begin date, it was 7/1, and then it went to 9/30, I would need to be very careful that I did not spend money or obligate money before that. So again, that's where we all have to have those conversations to make sure that we're in line. And this is a budget summary example. This is for ESSA, and it has the buckets, the big buckets that we're used to. 6,100 salary, 62's contracted, 63, 64, 65, and 66. It also has indirect cost in case your district has submitted for an indirect cost rate and applies it. Again, in a little bitty district, I haven't really applied indirect cost in the past, but when I had a Title I budget of $3 million, yes, I definitely did. So one of the key notes I want to make is a business manager, CFOs need to have a copy of this. The budget officer, if you're in a mid-sized large district, I would not be able to begin to set up a budget on the general ledger for a federal grant unless I see this. Because if the grant manager says, well, we got money for travel, for example, in my mind, I'm thinking 6,400. But remember that for travel, under the obligation rules, we can't expense that until the travel occurs. So what some districts have been doing is paying for registration fees ahead of time because they can, according to TEA's FAQs, they can pay for it, but out of a 6,200. So I need to see where the grant manager put travel money. Maybe there's some for lodging and meals in 64, but there's also some in 62. So again, this tells me the story of which budget lines are authorized. Because if a grant manager put 0 for supplies and materials, I shouldn't have any 6,300s in my budget. So I use this to validate what we should have on the general ledger. And then very importantly, this has changed over the years, the activities. There used to be where we, when I was a grant manager, had to check little boxes where we're going to use the money for math or science or reading. So it made it even more important to know, are we going to buy reading supplies? Well, if I set up a supply account that said supplies Title I reading, I would know that that was a grant activity that was approved. This schedule is activities to be conducted with reserve funds. Again, we'll kind of talk about it a little bit, but in the past, TEA has cited districts during the monitoring visits because they didn't reserve any funds. This schedule tells us in dollars and percent how much has to be reserved. So a budget manager, again, should get a copy of the schedule to know these monies have to be reserved for these purposes, which may or may not occur. Like one of them, services to homeless students. Well, what if your district doesn't have any homeless students? Well, you still need to reserve the money up front and then see whether you have the need or not. So let's jump into the top 10 tips. Okay, establish grant management policies. And I think this is an easy one for school districts because TASB Policy Service does this for us. They've done a good job of pulling together everything we need based on state law, federal law, etc. If you're with a charter district, then you probably have policies through the charter, Texas Charter Association, which might mirror some of what we have with TASB Policy Services. As a school district, TASB policy service is what I use, what I'm familiar with. So these are some of the ones that if you're not looking at grants, administration, budgeting from a policy standpoint, definitely look at these. CB Local talks about state and federal revenue. Finance side, grant side should be familiar with that particular policy. CBB Legal, again, state and federal revenue. CH Local has a lot to do with purchasing, our thresholds, and how we manage purchasing, which is one of the key compliance issues to any federal grant. And then CE is the local annual budget. So I'd encourage you to go back and look at those if you really haven't looked at them. But I did want to share, and I went ahead and pulled out from my CB local, which might be the same as yours because TASB pretty much has the same policy. And then what they end up doing is tailoring it to our specific needs if we want to change it. So in this case, it says the superintendent, but you know what that means? It's usually the designee in finance, shall develop and enforce financial management systems, underline, highlight that, internal control procedures, procurement procedures, and other administrative procedures as needed to provide reasonable assurance that district is in compliance with the requirements for state and federal grant awards. That's a mouthful. It says a lot. To me, my takeaway, I need financial management systems. I need internal controls. I need purchasing procedures and any other administrative procedures as needed to make sure I'm compliant. So that's kind of a checklist of what we basically need. So when we look at tip number 2 is to follow Edgar. And if you've worked with federal programs, you're familiar with Edgar, the Education Department regulations, non-negotiable because the federal regulations. If you get even $1 of federal grant money, you have to comply with Edgar. And most of us get more than $1. So in Edgar, it requires written procedures, specifically states in law written. And it's cash management. And to me, that's money coming in, that's accounts receivable. You know, when I submit a drawdown, I set up the receivable, waiting for the money to come in so I can manage that. Equipment management, which is again, fixed assets, the tagging, the inventorying. We're required to have inventory every 2 years, all those different things. Procurement is the big section all in its own. Professional services contracts, because very often we hire service providers to provide services for the district or for students. Accounting, compensation, and travel. Accounting doesn't really specify, but when you think of accounting, what do you think of? Well, in accounting, I think of budgeting. I think of accounts payable. I think of accounts receivable. All those different accounting functions, you know, maintaining the general ledger, budget changes, journal entries, etc. To me, all comes under accounting. So I say as a best practice that you would want to make sure you had budgeting procedures, and that's one of the focuses for today. So when you look at budgeting procedures, what do you want to have in there? Well, it depends on what your needs are, what your challenges are. So what I'm sharing with you on the next couple of slides are some sample budgeting grant fund procedures that I have in my state and federal grants manual. And it's the same manual that TASBO uses and provides through training through their platform. So this is cut and pasted from that manual. And I wrote this language really for me and for my district. And then if you, for example, got that template and you've customized it to your district, your language may or may not be the same. But this is pretty much the threshold and the process I set for my district. So basically CFO, that's me, shall budget as authorized in FASRAG, and then looking at the expenditure codes being consistent with the grant application. I want to make sure I do that. And then this is where when you get from regulations to best practice, we have flexibility as to how we do things. In my case, my preference is to budget money available no later than 30 days from the receipt of the NOGA or the stamp-in date. Because, you know, once you submit your Title I application, it gets stamped in, you can technically start using those funds. I would be very leery of anything like equipment that needs to have some negotiation. So as a budget manager, you're sitting saying, okay, when do I set up the GL? When do I start letting them spend the money? To make sure it gets spent and the grant activities get done, you want to do it as soon as possible. And to me, this is a big one because I get to visit a lot of districts throughout the state on behalf of TASBO and management reviews, what we call kind of efficiency um, processes and reviews. There was one district I visited one year, and I remember they did not set up their federal grant budget for I think it was Title One until November. My campuses will run me up the flagpole if I didn't let them spend any money till like November, even though we had a NOGA that said we could start spending in July. So my 30 days is kind of arbitrary. I don't want to wait 30 days. As soon as I get the no-go, we collaborate, we decide what the budget lines are, and we set them up. But I want to set some threshold to say, I'm not going to wait 30, more than 30 days, like 60 or 90 days, because I'm impacting the grant not being able to function as it should and provide those services or those grant activities we said we were going to do. So again, if you're looking at this, my takeaway for you would hopefully be, what's your number of days? Is it 10, 20, 30? Whatever it is, I think that's one decision to kind of make. And then on this one, budget amendments. Budget amendments shall be approved by the grant manager. And that's consistent because the grant manager is the one that typically will file the grant application and will file the amendment as well through TEA or the granting agency. So I go on further to say that the grant manager shall monitor the need for amendments at least on a quarterly basis and at least 1 month before TEA's deadline for amendments. That's going to be key. So how do they do that? Well, what I would say is if they're running themselves, or we in finance are providing to them their expenditures on an ongoing basis and they're monitoring that, they're going to be able to say, well, we budgeted money for this staff travel, but because of the pandemic, nobody can go anywhere. And the virtual platform isn't costing as much because no lodging and meals and so forth, that they may want to then see this excess pocket of money, file an amendment with the state and move it. We can move within the object codes, up to a certain percentage under EdFlex, but if we want to move more or create a new category, we need to go to TEA. And then basically the grant manager is going to follow that amendment and he's going to let the finance side of the house know, whether it's the CFO, the budget manager, purchasing, or everybody, because what does it mean? We need to change the budget. That's going to be important. And this is another key. I remember when I put that template together for TASBO, part of the questions that I got was, Becky, where is this written down in Edgar that we have to spend 25% within 3 months, 50% within 6 months, et cetera? This is simply a best practice. And I just, again, picked what seemed reasonable, that if we are spending in the first 3 months 25% of the grant, chances are we keep that up, we're going to spend it all by the end of the time period, 6 months, maybe 50%. But in your district, you could have a lot of heavy activities in the summer for summer programs. Well, then maybe this wouldn't be your percentage. Point being, if you have a 15-month grant period, slice it up, dice it up into what's reasonable for you and your district based on your grant activities. What we don't want to do is be 2 months, 4 months from the end of the grant and then realize we have all this money and we're going to have to very quickly spend it and maybe not spend it well. That TEA, and there's one district I'm thinking about, won't tell you who they are, but there's one district, and not in Region 1, one district that bought, and it was millions of dollars of equipment at the 11th hour at the end of the grant. And they happened to have been audited by TEA. And when TEA came, those items were still sitting on the shipping dock and they had not even been unwrapped from the pallets. So TEA disallowed those millions of dollars. So they very carefully in their, the general fiscal guidelines document say we cannot buy things like stockpile at the end of the grant period. So I'm very aware of that and try to not ever do that. So I have a purchasing deadline. I monitor the grants throughout, hopefully, so we don't have a lot of money left over. So again, these are just strategies as to what you can try to implement. And number 3, submitting the application collaboratively. I can't say this enough. Not only, and let's talk about Title I, because that's the one most of you, if not all of you, have. The grant manager is responsible for completing it, submitting it. But they shouldn't do it in a vacuum. They should talk to campus principals or site-based committee, et cetera, because if as a grant manager, I were to put things in a budget that we're going to do and the campuses didn't buy into it, what chances are it's not going to happen. So that collaboration has to happen there first and foremost. I would say a curriculum review. If there's some kind of um, software programs, some kind of instructional resources that are going to be purchased or acquired through this grant, well, C&I would probably want to vet that, either the programs or the cost, et cetera, and then definitely finance. We need to be in that loop somehow. And then ultimately, in most districts, the superintendent's the one that actually hits the submit button. And this is an illustration of kind of what I'm talking about with the collaboration. The grant manager is probably going to receive the grant entitlement. They're going to allocate funds using the appropriate formula to all the campuses in the district, and maybe some set aside for administration, subject to limits. Develop grant applications. This is where I think we all need to be involved. I want to make sure that I'm providing guidance to my grant manager of what goes in what object code. I'd rather do it before the grant goes in than having to amend it. That if they put all their money for travel in 6400, for example, and then I'd say, but you plan on doing a lot of virtual stuff, right? They say, yeah, and that's well for virtual. I know in my district, I think I set up a 6297 that rose to 6299 for virtual training because it's not travel. We're not going anywhere. So if the grant manager didn't put that in there and we didn't have the conversation, then we might have to amend it and move it. So again, that's a kind of input that I think we all bring our own expertise to the table and want to share it with each other. Someone is going to get the NOGA. In my case, I've kind of inserted myself in that process to make sure that I get it as well. Finance is going to be the one to budget the funds. And I mean, putting them on the general ledger, and then either grants or finance or both are going to do the drawdowns. So again, very important question to you is, where do you fit in there? Where should you fit? Where should you, if you haven't yet, inserted yourself in the process? So again, very important to make sure that you take advantage of being able to monitor it from the beginning. Number 4, setting it up in the finance system, setting up the budget. Again, can't say enough. Use the correct FAS/Reg account codes. I have a one-page cheat sheet that I use. I have an alphabetic list of object codes on my website. I have a numeric list of object codes on my website. Always trying to make sure that we're consistent in my district. I might not be consistent across the state with the way other districts have interpreted it, but I want to make sure I have consistency in my district. And from the federal fiscal monitoring standpoint, TEA back in 2018 had one of their last grant meetings that they talked a lot about findings. And these are some of the ones that were on there. So of course, when they say someone else has done this, I want to make sure I'm not the next one that does it. One of them was lack of budgetary controls, meaning there was no budget process or procedure. Budget system didn't match the NOGA or the grant application. Again, there was a disconnect. Reserve funds were not budgeted, probably a disconnect in communication again, using incorrect FAS/Reg account codes. And the last one they kind of talked a lot about, because it was lack of encumbrances. Well, how do you buy stuff without encumbering first? You probably didn't do a PO. Why would districts sometimes not do a PO? Maybe because there's no budget. And what they did see in some cases was that there were expenditures on a general ledger, but there were no budgets, which meant that when they were entering and approving POs through their system, and maybe they were encumbering, they were overriding the budget because there was no budget that had been set up. So again, no budgetary controls, because that's what the encumbrance is for. We have a budget, we submit a PO, and it decrements it, to obligate the money until we receive the goods and pay for it. So again, very important to look at the FAS/Reg. And then one of the things that I love today, and for those of you that are just kind of joining in school finance or grant management, we didn't have a lot of resources back in the day, as I always say, but they have a lot now. And I sent you 2 presentations. One was a 2-pager that you could print. One was a full page slide. And the reason I PDF'd it was because all of these links are active. So you can click on that document and you can navigate to these different links. They have a general and fiscal guidelines, a must read for finance folks. They have a budgeting cost guidance handbook that I absolutely love. It's got the A to Z of what you can pay for federal funds and what you can't. Forms for prior approval, disclosure, and justification of certain costs, and then the indirect cost worksheet. But there's a whole lot of them. There's a grant management 101 booklet in there too. There's a lot of different resources, so you want to avail yourself of that. Okay, 5, comply with the property standards. And again, this is part of Edgar, putting it in the context of our conversation today about budgeting. You want to take a step back and see what the capitalization threshold is in your district. For my district, it's in board policy CFB local and it's set at 5,000. So remember what I said a minute ago about some districts not using the right FASRAG account codes. We all tell ourselves, well, we know the codes, we're not going to get them wrong. But look at this scenario that if we're looking at the FASRAG and we're buying supplies, that's a $63.99. If we're buying furniture, equipment, or software that has an over $5,000 value, that is $66.39. And there is in the FASRAG a $66.49 that is other capital assets less than 1,000. So what some districts will do is that they will go ahead and set up maybe less than 5,000, like over 1,000, $66.49. Well, what does that mean for a grant standpoint? What it might mean is that, do you have that money budgeted in a 6,600 on your grant application? What I've chosen to do is that, you know how you have the 63.99, I use some of the local use codes to allocate out equipment that is not going to be tagged. Again, in my district, we've, under our fixed assets procedures, we tag everything over 1,000, but we capitalize everything over 5,000. So deciding what your property standard threshold is will dictate which object codes that you're using. So again, that's going to be very important to kind of look at it that way. So if I look at the TEA guidance, budgeting cost guidance handbook, there's a section in there that talks about capital outlay, and it talks about that $5,000 threshold. And what's interesting is this bullet, I kind of just cut and pasted it from it. It says technology purchases, and there's a big section, and it defines what a computing device is, what a laptop is, and a tablet, and all these different devices. But what it says is that technology purchases require specific approval from TEA if its acquisition cost equals or exceeds the lesser of the capitalization established by the non-federal entity, AKA school district, for financial statement purposes of $5,000. And it says if the technology purchase is less than the capitalization level, it should be budgeted in supplies and materials. So that gives us a hint that if you're using 66 instead of 63, perhaps you might look at changing how you budget to make sure that you have it in the right bucket. You know, it's not so much what code we use to tag, to identify what gets tagged. What are you going to capitalize? What are you going to consider a 6,600 for your actual, for your grant application? That's what's going to be important when you're looking at that. So it also says that after grant funds are awarded, they must be expended according to the budget. And this is where I was talking about it. It's so specific as to the type of devices. We might think, well, we issued a PO for laptops, so we decided to do tablets, let's just change it. Not so quick, because it says if the district budgeted, the sub-grantee budgeted for laptops and decides that tablet computers would be more cost effective, the sub-grantee must submit an amendment because now they have to approve tablet computers. That's why I say over and over that the finance folks have to collaborate and talk to the grant folks if that decision is made, and the purchasing folks too, because who's a gatekeeper as to what gets bought and paid for? Well, purchasing is one of them, because what they're going to do is say, okay, well, here was a budget for laptops. And they may think, well, okay, so they changed it from laptops to tablets, we're good to go. No, not so quick. So again, this is important. And I gave you the page number. This excerpt came out of page 13. If you're not familiar with the TEA Budgeting Cost Guidance Handbook. It's a great resource. I posted it on my website for my stakeholders to see it. Because when I tell them, no, you can't do that because, that's a wrong account code or that's a non-allowed purchase, it gives me much more lever to say, go to page 19 of that TEA document, and it tells you you can't do that for that reason. So again, very important to kind of put it in context that they're not my rules, they're TEA rules. Number 6, share grant oversight and compliance. And this is where I say we all kind of play in this, that the grant manager, in my mind, has programmatic compliance. I will look at it from grant activities, what they plan to do, how they plan to measure success. All that evaluation, kind of program evaluation part goes there. But I still, in my district, ask them to vet, review, approve purchase orders that are for federal grant funds, because I want to know, and I need their expertise to know what the intent was when they budgeted monies in certain categories. And then the purchasing folks, again, are key because of the procurement, but it doesn't end up in purchasing's lap until we get the grant application and the budgeting folks, whoever it is, actually sets up the budget. And then the final thing is actually the whole finance budget process, from getting it on the general ledger, making sure that all those POs are encumbered, the budgets are monitored, making those payment disbursements, whether they're payroll or non-payroll. So again, we all share in that compliance, and we can only get there by talking to each other. And monitoring. So the budget summary, when I'm looking at what I showed you early on in the reference info, that clip of a budget summary page, 61, 62, 6300s, I say that it should be reconciled with the general ledger on at least these occasions. You might think of others, but for sure, when I get the original NOGA, I need to make sure that the NOGA matches the GL, the general ledger. When the grant application and budget summary are amended, and again, because I received that, I know that I need to take some action. I need to reconcile the two to make sure they match. Prior year roll forward funds, if TEA releases them and says, you know what, you got 30,000 that we just released for prior year funds, I need to again make sure that the budget is increased and that it ties back to the grant application and the NOGA when final entitlements are released. And that tends to be in the spring. You can go to the TEA website. It has all of the entitlements out there. And once you see the entitlements, then you get your final entitlements, usually March or April, sometime around then. And definitely before every drawdown. And it's a good indication for me, since I do the drawdowns in the ER system in Teal. When I go in to do a drawdown, I always print a GL. I use that GL and the total budget I have to look at the ER system drawdown to see what the budget is in there. What I don't want to see is that in my GL, I have an $85,000 budget, but then I look at what the ER system has and maybe it has 90. That means I would have missed the boat, that there was a $5,000 increase, say to Title I, that I missed, that I wasn't aware of. So I always take opportunity to say, okay, I've got this on the GL, I've got this in the ER system, is check, I'm good to go. So again, another way to go ahead and double check. So I'm always kind of checking just to make sure. And then request reimbursements. This is, I think, where the rubber meets the road, because we can spend all we want, and then until we actually ask for money back from TEA, then it's almost a point of no return, because we've said we've complied with a grant application only on grant activities, only spent it in the categories we were approved to spend, and now we're wanting you to give us our money back. Before we did a drawdown, they don't know what we're spending. They don't know where we're spending it. But when we spend it and ask for it, then we're telling them this is what we spent in total. It's not as detailed as it used to be by groups. It used to be very detailed. So when we're looking at drawing down, I guess my question to you would be, how often do you draw down? Now, granted, there are some grants that require monthly, quarterly drawdowns, and we don't have an option. And if we don't draw down, it could be punitive, that maybe we would lose the opportunity to draw down later. Most of the TEA grants, like Title One, there's no set schedule, but there's a caveat, and I'll talk about that in a minute. But remember when I talked about we want to spend on an ongoing basis, maybe 25%, 50% and set our own thresholds. Part of that is because if we're not drawing down on a regular basis, TEA may assume, because we're kind of sending them these messages, they might assume that if I don't do a drawdown at all until maybe February, and I've been spending money since last July, TEA may assume I'm not spending money because I'm not asking for any. That means I'm using my general fund. They may assume that because I'm not sending in a request for a reimbursement, that I'm not conducting any of the grant activities I said I do in the fall and early in the spring, etc. And the district may end up spending the money near the end of the grant if I don't send in a reimbursement till the end or near the end of the grant. So again, we could be sending out all these smoke signals to them saying they're going to assume that we're not fully implementing the program. And for me, I know, and some of you listening, you're in little districts and you're saying, well, Becky, that's not my top priority. I got so many other fires going on. It's so small that it's not hurting my general fund by not drawing down money. But if you're the big district, like a McAllen school district, you're going to say, no, I need that money back from my general fund. I'm going to draw it down every month. But whether you do it every month or you do it every 2 months, whatever schedule you've set for yourself, I guess point being set a schedule, it would be important just to think about the signals that you're sending TEA. You don't want them thinking that you're not drawing it down because you're not actually implementing the program. So again, very important concept. So when I'm talking about drawdowns, we need to make sure that we are supporting every expenditure that we're drawing down with the general ledger. Because at the end of the day, if you get audited by TEA, that's what they're going to look at. They're going to look at your drawdown for the month of April. They're going to look at your GL in April and see what it was. So what I do is I have a spreadsheet, I'll show it to you in a sec, that I use to kind of reconcile what that drawdown is. Once I've done that, I ask the grant manager to review it again. Trust but verify. So she signs it, I sign it. I'm the one that actually goes into Teal and draw it down. But I save a copy of the 6XXX expenditure. I look at it by object code. I also, and I'll talk about it in a minute on the sample, I also run my 2161 accrued salaries and my 2211 accrued liabilities because I got to back them out. So when I created the spreadsheet, I had the certification statement because in Edgar, I read I don't know how many hundreds of pages that thing is, but when I was reading it, it said that we had to certify that it was true and correct, et cetera. So I kind of took that language and threw it on my form. So this is what it looks like. And this is from a drawdown back in October. And I did a real one with numbers so you could kind of see it. And Oscar probably has a copy of this because I shared it with the audience at the TASBO Budget Academy. But if you want it, I can send it to Oscar and he can send it out. It's just an Excel spreadsheet. And the way I had it was one tab was 211, one was 212, one was 224. So you could do that. Right now, I think I'm only doing it for 211. So kind of looking at it, this is my drawdown certification form. So it takes care of a lot of different purposes. One, in the first column, I set up my budget. And you can see I have almost no money in Title I in this district. So I only have $82,000. I used to have $3 million. That was a bit of a challenge. This is not. So I have the 6,100. So I know that when I take my GL and I drop in my numbers in here, I had better not have 62, 3, or 4, or 66 because it's not on the grant application. So what's on the grant application summary that I showed you is what I drop in here. That's kind of my reconciling to make sure I'm adhering to it. Then I look at year-to-date reimbursement expenditures, and that helps when it's multi-year. I have one grant that's ending, that's a 5-year, so that's been a bit more challenging. So I have the year-to-date reimbursements. I hadn't had any yet. And then the current GL expenditures, take it straight off my 6,100s, drop it in there. And if I had 62, 63, I would drop them in there by total. And then you see a column for reimbursement amount. So it's doing the math and saying, okay, this is, total amount expended, less already reimbursed. This is what you're going to get. And then you see towards the end, it says grant amount remaining. So it's doing the math. So I know how much I have left. I need to hurry up and start spending this. And then it has a percentage remaining, because remember, I'm monitoring percent. So this was reimbursement request number 1. It's for Title I. It was as of October 31st. So you can see I didn't do one in September. We didn't start spending money till September, but I did it in October. I'll do it at least once every month or a couple of months. And then you see that certification statement. Grant manager signs it. I sign it. But what I have an arrow on is 2161 and 2211. I mention this to some districts sometimes. They say, well, Becky, why do you do that? Well, if you are accruing salaries, keep an eye on my time, if you're accruing salaries in your district on an ongoing basis, I know I do that. I have expensed salaries for the summer or, throughout the year that I haven't actually paid out. I haven't dispersed them. And to draw down money from TEA, you must have expensed it. We can't draw down encumbrances. We can only draw down expenditures. So I take the total 2161. In this case, it's a small account. Yours would probably be much larger in a mid-sized large district. So I back that out of my expenditures. And then I look at my 2211, which are accrued liabilities, and back that out. So even though I have spent $18,819.45, I'm only drawing down $13,796.76. If I drew down all 18,000 plus, and I have the GL to support it, and I get audited by TEA, I would undoubtedly get written up. And then I'd have to send the money back because I drew down more than I had expended and dispersed. There's a difference between what is on our general ledger and what we have actually dispersed when we're talking about payroll. So just an important note, because I know people ask me that all the time. Why do you do that? And I just assumed I had to because I haven't spent that money. And then number 9, this is where I said earlier, don't be on TEA's radar. Monitor your district's risk level. Every district is assigned a risk level for grant management. So I went to TEAL, I went to the GFFC module, and I printed down mine to kind of just throw it on there. No, I'm not bragging it's low. I could misbehave and next year it'd be medium or high, but thank goodness it was low because I was going to show it to you all. But basically, it's the 2021 Annual Federal Fiscal Risk Assessment. You go to GFFC in TEAL and print yours, save it off as a PDF. If you've never seen it, yeah, I would definitely encourage you to do that. And if you were a medium or a high risk district, what does that mean? Well, one, on the positive side, you can use it for leverage to say, we're going to have to buckle down, set up these budgeting procedures, set up these processes because we're a high level and we need to get to a better position. So you can use it for corrective action for yourself. But on the bad side of it, what it means, if you're a high risk, instead of just going to ER and entering, I spent $13,000, send me my money, TEA, if you're a high risk, may say, okay, you want $13,000, send me all your general ledgers, all your payroll journals, send me all the documentation, send me the checks and invoices for what you paid, because we're not going to send you your money until we verify everything. So again, that's why it matters. So I suggest, one, that you become aware of where you are, because sometimes you might talk to your neighboring districts and say, well, I always just fill out the ER. It's real quick and easy. I just plug in an amount and I'm done. And a district down the road is saying, oh no, I hate doing drawdowns because I have to send my general ledger. I have to send copies of checks and all this and that. And you're wondering, well, I wonder why they're doing that. Sometimes, and it could be for other reasons, but this is a big driver. So how do you not get on the radar? Hopefully you use the PDF I sent you. If you don't already have this bookmark, go to that hyperlink that says criteria used in risk assessment for 2021. It's on the TEA website. I just cut and pasted 3 of them. There's a whole mess of them. There's a lot of them, but I put some in here that are about things we've talked about. So the first one, the subrecipient has not drawn down federal funds by January of the current year for one of those programs, Title I, again, like I told you, that's the big one. So if you're looking around, you're not in a room right now, you're kind of all virtual, but if you're looking around and saying, oh my gosh, we haven't done it yet, and here we are in February, in March next week, that is concerning, because that's one of the risk assessment. It doesn't mean that that alone would probably get you there. I wouldn't think so. But that's why it's important. It's not just that we want to get the cash back. It's not just that we want to tell TEA that we're spending the money along the year doing grant activities and that we're not just all mass buying at the end of the year, but we don't want to be on the radar for this risk level either. And I guess I'm talking mainly in, big districts. I'm assuming you're drawing it down because you need the money. You need to put your, millions back into your general fund. For a little district, you might say I don't think it really matters because, we're talking very little money. It matters for this. So again, if that's new to you, I wanted to share that with you. And then the subrecipient has lapsed funds for at least one of the following ESSA grants. And then it lists the ESSA grants. And then the subrecipient has carried over excessive amounts. That's why, again, when I talk about spending 25%, 50%, 75%, your own made up percentages along the way, that's what you're trying to do. You're trying to not have a stockpile of money at the end of the grant that you didn't spend because A, you're going to let them lapse. And then, or B, you're going to end up carrying forward a whole lot of money. So again, it's very important to look at it from that standpoint. And then I say kind of lastly, this is my saving grace. I mean, I'm always playing around the TEA website. There's so much out there now that I really like that. But the TEA grant opportunities, and the hyperlink is active down there also. This is my go-to first. If I have a question about a grant, like when we got that safety security grant. I mean, for me, it wasn't that exciting. It was like $25,000. It was just one more grant to keep up with. But everything I needed to know, I go to the applicant name drop down box. I find that grant. Within the grant, you can get kind of the purpose for the grant. You can get your program guidelines. You can get the grant periods, the amendment deadline, the deadline to file the final expenditure report, the date to file any drawdowns if it's required by the grant. So all of that is in there. So this is not just the stomping ground of grant managers. It should be ours in finance too. And you can see on the left-hand side, the erratas, the changes that are issued. There's a link for the guidelines, provisions, and assurances. And there's one for those forms that I mentioned, like the pre-approval for certain activities that require approval. And if in a business office, there's a form that's required like for a student trip or some out-of-state travel. Well, ideally that campus principal or director is attaching that to PO so that record exists there to support it. The budgeting cost guidance handbook I talked about that I raved about. I love that book. It's hyperlinked there. Procedures on how to amend an application, and then again, the help desk. So all of that is available through this one link and resource. So I guess to wrap up, right around, 10:45, great time for questions. What should your district do to achieve a low risk assessment? That's not the main concern today, but it is a concern because how will TEA know if we're not using a correct account codes, if we're not drawing down correctly? They will know when they visit us, and we don't want to be on their radar to get visited. So again, with that in mind, I think that's going to be part of what's really important. So let me go to, I don't see a Q&A, so I'm assuming you're using the chat for questions. So let me go.
Yeah, that's correct, Becky. And I think you have a question here.
Okay, I don't see the course materials. Can a link be posted here? I guess that's maybe for Oscar to share that presentation.
Yeah, and it is on the website, but yes,
Okay.
we can address that one.
Okay, good. And then Becky, we'd been using Title II primarily for planned staff development and recruitment. However, after the panic, we had difficulty spending funds in these areas, opted to submit an amendment, okay, to transfer Title II to Title I, Part A, where there's more flexibility. It applied to Title IV as well. Can you talk about that? Well, when you say you transferred money from your Title II to Title I, did you do that through a consolidated application where you were consolidating different grant funds? I guess would be my question. Now, honestly, I had never moved it from one grant to another because those entitlements were independent. But what I have done in the past, well, now with the pandemic, is making sure that I'm moving money from 6411 either to contracted services to have someone come in to do training. And again, like I said, for the webinars, any virtual learning, virtual conferences, we are paying for those out of 6297 instead of a 6400. So it meant some changes. So let's see. Okay, so through the ESSA application. So I guess if you were able to transfer it through that, I guess what I would look at is based on the application where you put the money, are you still trying to look at having virtual training, or did you just kind of go with other categories? So if you can, other categories. Yeah, I think if you're not really focused on the training, then you would need to make sure that your grant activities kind of align as well. If you moved it in there, I would refocus on those grant activities and see where you can have some leverage to actually do some of those things between now and the end of the grant, which of course is next September. I think one of the challenges for all of us, kind of good and bad, was that we got ESSER money and we were able to supplant with that, which was great. But only because we lost it on the state side. We don't know what ESSER 2 is going to be like. And I know there was a conversation about that earlier. What ESSER 2 will look like, supposedly, what I've been hearing is that it's 3 to 4 times more than what we got in the first ESSER. But the decision had been made about supplanting, unless y'all heard something earlier, to the contrary. But that's kind of what I had heard so far.